everyone. Welcome back to the Heritage Corridor Business Alliance Power Hour. This is our regular webinar and video series, and my name is Dan Molka. I'm the Executive Director of the HCBA. Today we have with us from Lemont Bank and Trust, Lori Ritzert. Lori, I'll have you give just a quick introduction about yourself, and then we'll go right into your presentation.
Sure. Again, Lori Ritzert. I'm with Lemont Bank and Trust, which is a Wintrust community bank. And I've been with the bank for 20 years. And I currently am doing community business banking. So I'm working with individuals that own businesses or maybe looking for deposit accounts, loans, you name it. So I do SBA financing as well. So one of the things I enjoy doing is reaching out to the community and seeing how we can assist and help businesses obtain money or services.
And whether you're looking to start your own business or you're kind of knee deep in business, Lori and her team, there's different ways that she can help. And she's going to kind of start off with, the things you need to know before you even call Lori. I think that's probably a good way to put everything there. So we are going to jump right into the presentation, and Lori, take it away.
So yes, a lot of the calls that I'll receive is, what is business financing? So, pretty much when you're looking at your needs or starting a business or currently have a business, you want to see what you need to possibly start, operate, or grow your business. So there's different ways that you can go about doing this. And basic financing concept is equity financing versus debt financing. Using your working capital versus financing fixed assets. So you definitely want to reach out, know what it might be that you need, and we'll just go to the next slide. So what are the do's and don'ts for small business and financing? Do you want to use your own money to invest into the business that you're doing? Do you want to earn right now to borrow? Show profitability, understand and keeping working capital, and be lean on fixed assets, and then match sources and use of funds. So the do's and don'ts of financing for small businesses is really starting off and figuring out what your business plan is, going and starting to say, this is what I want to accomplish. What is it are my needs for the business? Do I need equipment? Do I need inventory? Do I need staff? What is it once I have that? There's other things that go into it. If I have staff, do I need insurance on the business assets, on the inventory, and also what am I offering? So there's a lot of stuff that goes in. So typically when you're reaching out to a bank and you're trying to figure out what are my needs, you're going to go ahead and kind of lay out what it is you're trying to accomplish. If it's maybe you're providing service, maybe you're providing goods, you want to go ahead and figure out what my needs are. So your do's and your don'ts, typically you're going to go back and figure out what is it that I need, and have that outlined for you so you can go ahead and realistically figure out what it is that your ask might be. So you definitely want to understand your financial statements. You want to understand what your collateral options are and understand the risk and cost for loan types. So let's go to understanding your financial statements. Obviously, if you're starting a new business, your financial statements are typically, what is it that you currently have? And what is it that you're trying to possibly obtain that you need to start that business? So obviously you don't have revenue coming in because you might not have sold anything yet, or the service hasn't been done with someone that you're signing a contract with. So the financial statements are pretty much what it is that you currently have to start that business. And you're going to have a sources and uses. So that's also very important too when you're looking to obtain credit. What are the sources that I have in order to do what I need for my business, and how am I going to use those funds? Your collateral options. When you're selling goods, that's part of your collateral. Maybe you need to obtain equipment or you need vehicles. So that would also be collateral. That would be an asset. So when you think of understanding your collateral, think of what is it asset wise that you have in order to obtain credit as well for collateral options. Understanding your risk and cost for the loan type. So obviously, when you're asking for a service or a loan, there's different risks. So you definitely want to know, what is it going to cost me to do this loan? A lot of times with startups, you have SBA financing. So with that SBA financing, I usually call that almost like insurance for the bank to feel comfortable to actually give that loan. So that in turn, you're going to be paying more cost for that type of loan. No grants. So some businesses can maybe go ahead and apply for a grant in order for a source of revenue for them to come in. Always shop around. Make sure that you kind of figure out what it is that your business needs, and then shop around for those services. All the banks offer deposit accounts to hold your money and to use, and they also lend out money. But you want to shop around to make sure maybe there's some additional needs. Maybe there's some treasury management where you might be out where you're not having an office person that's there for you. So when you have your receivables coming in, you might need a lockbox or merchant services, credit cards, check scanners. What is it that you're going to need to make sure that your business is running smoothly? But with any of those type of services, they come with costs. They come with fees. So you want to make sure that you understand what those fees are to shop around, and that they can actually give you the best for what you're trying to accomplish. Get expert advice. Go to your bank. Go to the SBA. It's harder now to actually call the SBA to find out maybe what type of loans or products they may or may not have. Go to your bank, see if they can go ahead and work that through. Typically, banks are working hand in hand with the SBA. There is information online that you can go, but make sure you're going through a source that is actually, SBA.gov, that there's a .gov after it. Be very cautious that you're not just submitting applications to somebody that is saying that they can help you. Don't be giving a ton of information until you can verify that information. And SCORE is also additional resource. I send a lot of customers who are trying to put a business plan together, trying to put their projections together. They might even be in business for a while and they want to expand. Does it make sense? Do they want to open up another location? Does it make sense? These individuals have been in the industry, and they're willing to sit down with you, go through everything, talk to you, and review stuff with you, and then really take a look at the projections as well. And obviously check with your accountants and financial advisors. Some of those are also able to assist.
And I know you mentioned sort of looking for the .gov, this day with online scams and things of that nature. It's probably good to even reach out if you have any doubts. Ask somebody, reach out to a banker or somebody else to be like, I'm looking for the SBA. I want to make sure I'm actually going to the right spot.
Yes.
You know, you don't want to kind of, have all your business dreams messed up just because you went to a scam site.
Yes. And I've had people, unfortunately, we're dealing with fraud all the time, but working with a bank, you're hearing all the different scams that are coming on. And when you're getting scammed out of money, typically. So you definitely want to make sure that if you are talking with someone that it's legit, don't be giving out all your information. Nothing can be done same day, regardless as much as that they say that, unless you're going somewhere. I shouldn't say that because there are some places you can go same day, but those are usually interest rates that are well over 30% in or higher that you don't realize. So make sure, I always tell people you can wait a couple of days
Mm-hmm.
just to be sure. So steps of getting ready for a loan. Make sure you have a business plan. It might not be exact, but you should at least have what it is that you're trying to achieve, to work through. It's going to help you as well. We at the bank, I have modules that I give people if you're having trouble. It's kind of like writing a plan on the back of a napkin. There are people that actually will have a napkin where they started putting thoughts down. So there's nothing wrong with that. Include a profit plan. Know what you can afford. Study your financial statements. Obviously with a small business, check your credit report. Um, Even SBA financing, anybody who has 20% ownership of a company, typically they're going to have to personally guarantee that loan. So they will be looking at you. If you think about it, if you're owning a business, you are the business. You're getting your money from that business. So they are going to look at you as well and do a global. So you want to check your credit report, make sure, and I recommend this regardless. Um, every year, there's annual free credit report that you can get free of charge, and I highly recommend and put all those alerts out on there as well. Establish collateral options. What is it? Okay, what is my assets? What do I possibly own that I'm willing to maybe give as collateral for the loan? Show your equity contributions. I've seen businesses that started out a business and put it as, revenue. Well, obviously, you paid taxes on that. Check with your accounting. Make sure that you're actually showing your contributions as equity contributions, where at some point you want to get that back. Research your financing options. So, those are definitely things that you want to think about when you're getting ready for a loan.
And I know too, one of the things you mentioned was that business plan. Would you suggest that even if somebody happens to be in business and doesn't have a plan to, start working on that plan?
I always think that you should have something, strategic planning, regardless of what it is that you want to do, where you want to go. To me, even though you're in business, I've had business owners who have been in business for 25, 30 years, and then all of a sudden something's happening. And it could have been that they got advice from someone. Oh, do this. This is totally going to help you. And without putting down what it is that you're trying to accomplish, you might at some point take someone else's advice. Sometimes it works out, sometimes it doesn't, but it's a way for you to go back to say what's working and what's not. So I suggest it's just going to make you take a look.
Mhm. And
Take a look at your business.
and probably from the bank perspective, it gives a little more confidence of that the business owner, in essence, is aware of all sorts of factors that could affect the business.
Correct. Yes, definitely. Common elements of a loan package, again, business plan, business financial statements, current and historical. So a bank is typically going to look at where you're at. So we're going to be in June of 22. So when I'm talking to a business, I'm going to want at least 20 and 21 financial statements and a year to date. Or at worst, you know, they should hopefully have at least 331, 22 numbers. Again, personal financial statement. What is the position of any owner of 20% or more? What is it that they have? So that's giving your information as well. What's your assets? What's your liabilities? And then, of course, we're going to look at personal and business tax returns. So, why, if I give you my business tax return, would you want my business financial statements? Well, business returns, if you look at it, it's kind of lumping stuff together. Some of it might be broken out, but your business financial statements is going to break it out even more, but it's also going to show your assets and liabilities broken down as well. What is it that you have and you might have as far as assets, and broken down if you have liabilities, that breaks it down as well of, kind of line item, instead of just grouping it all in one on a business tax return. Also, source and amount of equity contributions. So, what was the source? Who gave me that money that's showing for the contribution? Maybe they're not an owner, but they have a loan out there with the company, and what is the amount of that contribution? Again, credit report. We also pull a credit report on the business now. So we use Experian to pull a business credit report, but we also, again, pull a personal. We're going to look at the collateral. What is collateral? So if you have a company that is doing a service, but your collateral might be accounts receivable. So that is a form of collateral. So receivables that are out there that you're waiting to collect. Maybe you have to place an order for inventory. So that's also collateral. It could also be equipment, purchase agreements, appraisals, contracts, and estimates. So that's pretty much, gets looked at depending on the type of loan that might be going on. What is the criteria for qualifying for a loan? Obviously, a good credit score. So with the business, it's going to pretty much on the business report, it does score, but we don't technically go with that score. We don't score it saying it has to come in at a certain amount because right now it's newer. But personal credit scores, usually the average is around 680, but there are loans that could be approved as low as 620. But every institution is different. What might qualify could be different dollar amounts as well. So keep in mind also by shopping around, you want to understand what makes sense, but you just don't want to go in and say, my credit score is X, because there's 40 different scoring systems that are out there. There are 3 credit bureaus that are giving different types of scores, and it depends on what scoring module that the bank might choose to use. Equity contributions. Are you making a contribution into the business? I've had individuals that have sold a percentage of their company for an equity contribution as well. What is the repayment ability? Well, when we're looking at doing a loan and what's going to qualify that, we want to make sure that you have the cash flow, the ability to make payment. So we're not necessarily looking at the collateral as a source of repayment. I don't technically, being at the bank, banks don't like to take on the collateral. They want to look at what's the cash flow. So if your business is losing money, you're not going to have the ability to make payments on a loan. So you have to have the cash flow in order to repay that. And then loan to value ratios. If you do have accounts receivable or a car or equipment, there's going to be a loan to value ratio that is looked upon, because obviously you're not going to lend over. If you have 100,000 in receivables, you're not going to be giving a loan for 200,000 to somebody, realizing that the capacity of those even coming in is unsecured. So, what are the financing options for a startup business? Obviously, equity, sweet equity, business credit card, and family. So that's just, I'm not going to go too much into that, but that's just different, other financing options that people might go to in order to start their business that they wouldn't be going to necessarily a bank for. Where should you look for a business loan? Banks and regional lending organizations. So you want to go ahead and see what's available, possibly in your communities, with the banks, seeing, there might be financing through, the type of business that you have. Sometimes there's organizations that are out there, but obviously when you're going into a certain business, you're already hopefully doing research to know what other lending organizations might be out there besides the bank. Key points to remember. Financing is getting the money you need to start, operate, or grow your business. So you want to start with a budget. Sound bookkeeping is the basis for all financial management. You need to know and keep up on your books. Purchase and learn how to use financial management software. There's a ton of softwares that are out there. A lot of the banks merge QuickBooks. If you have QuickBooks, it goes right in and it goes right into the bank's information, automatically downloads into it. So look at the different financial software that's going to be easy in order to do that. 3 statements, a balance sheet is going to show what your assets are and what your liabilities are. Your cash flow statements is going to be showing you what the cash flow is of your net operating. And then the profit and loss statement is going to provide a compelling story to describe a business. So that's also, it's bringing in what your revenue was, so your gross receipts, what the cost of goods are, what your net profit is. Then it's going to go and list out all your expenses and then come back to let you know what your net income. Separate your personal and business records and funds. I have a lot of people that they try not to, they'll have everything as one. It gets messy. I always recommend to separate it, because then when you have it merged, you kind of lose track of what might I need to stop spending on personally than what I might need to be doing on my business. So definitely want to make sure that you're doing that. Factors that affect your ability to get a loan: credit score, equity contribution, repayment ability, and loan to value ratios. So that could, if you have bankruptcies or a very low credit score and you're not paying your current obligations, that's going to be a red flag to say, well, I don't know if you're going to have the ability to be making payments on the loan.
And that makes sense too, because if you don't have your personal house in order, how could you have a business house in order?
Mhm. So a lot of times I'll get financial statements and just understanding that. I already said balance sheet, cash flow projections, profit and loss statements I've talked upon. Um, so we're going to dig a little bit deeper into this. Um, so this is typically from a guide, and I know it's saying to look at that, but this is just giving you kind of that balance sheet where I was talking about what's my assets, what's my liability, and your owner's equity is actually a liability because you actually gave money to the company to start running it. And your hope is, I hope, is to get that owner equity back, where it would then not show up as a liability any longer. What is cash flow? Two primary definitions: balance of cash received less the amount of cash paid out over a period of time, and moving cash in or out of a business. So, a financial statement using assumptions to forecast. So, company cash flowing in and out, future cash flow during a specific time period. Some of our businesses are seasonal. So, what do we think our future cash flow? Maybe we have to gear up for a busy time. So, obviously, a lot of times you're incurring more debt. So, what is the cash flow that you might need at a specific time? And if you have an influx of cash, you want to kind of look at future. Okay, I'm going to have this, but at what point am I going to need possibly put that aside a little bit for the times where I don't have that influx? Project whether cash receipts inflows will be sufficient to cover projected cash disbursements outflows. So make sure that you're keeping an eye on this stuff, and that a lot of times people will be like, oh, I have these receivables coming in, I'm going to go ahead and spend it, but they forgot maybe they had to pay for the part of the inventory, or maybe they have to pay for someone who's working for them, and they just went ahead and they're just looking at that receivable, and maybe that individual defaulted on that receivable. So you got to be careful when you're projecting for your inflows and outflows, that you're not putting yourself in a bad position. How can a cash flow projection help, and when do I need one? You want to set sales and expense goals. Determine what your break even point is. So that's extremely important. A lot of times when you're setting up and you're reaching an agreement with someone, or you're setting prices for something that you made, or um, a great would be like a restaurant. You have staff, you have to buy the ingredients. What is it that I need to make in order to break even? If you're not breaking even, you're going to be at a loss automatically if you don't set your rates up. One of the things someone was telling me yesterday is that, they send out a lot of FedEx, and they just put a $30 surcharge on some of the stuff. So, did you include that surcharge when stuff is coming through? How do you go ahead and pass that off? You don't all of a sudden want to be doing something and you're not keeping an eye on what your break even point is. Plan for equipment purchases for replacement or expansions. So when someone tells me they're buying equipment and they're going to put it on a line of credit, I'm like, you know what? That line of credit is more for working capital, or when you're going ahead and you're putting something on a line that you know that you're going to have money coming back in sooner than later. For equipment, you're purchasing that. So if you put it on a line of credit and you're just paying interest every month, all of a sudden that piece of equipment could break down, or now you have to replace it, and you don't have the wherewithal to then go ahead and purchase or fix it. So you want to make sure that you're planning for when you're doing that, that you are paying that down. Determine the cash needed to purchase inventory for seasonal cycles. So again, you want to make sure when you might be in need of the cash in order to have that inventory.
And cash flow is probably an important thing to re-examine on a regular basis,
Yeah.
especially, payrolls have gone up, price of gas, inflation. A lot of things recently are truly affecting every business's cash flow.
Yes, and one of the things that I notice a lot of times with my customers is when you all of a sudden start seeing, this month something's going on, something's happening. You might have had something with insurance. Insurance, you mentioned it, has gone up. Cost of gas has gone up. What is it that I need to do? What is it? Do I feel as though this is going to continue and it's going to start scrunching everything? Um, I always tell people if all of a sudden something's happening, your account's payable, you don't have the funds to come in, what changed? And a lot of times it could just be that your break even point has changed. So you really have to look at and see, okay, what is it that I'm spending more on? So by having a software instead of maybe manually doing it, it'll give you that difference of what's going on automatically. Like you could do if you're seasonal, you can do it from a quarter last year to a quarter this year to see what has changed, but don't ignore it. The biggest thing is when things are going on, that was a one time expense. A one time expense, you can explain it. But when it's something that's going on, it's changing the dynamic of the business where you're not at that break even point, you got to figure out what it is that you need to adjust in order to, you can't absorb it because after a while, your business is not going to be able to thrive. So, very important. So, so how can cash flow projections help? When do I need one? It tracks your liquidity. When accrual accounting masks cash realities, helps you determine the need for financing, shows lenders your ability to plan and repay financing. And cash flow projections, if you're an established business, you're only going to want cash flow projections if you're looking to maybe expand or add on or stuff like that. If you're just looking and you're an existing business and you're looking for a line of credit and you're pretty much, this is my need and whatnot, um, pretty much we're going to look at existing and past. You might not have to do the projections, but if you are looking to add or change, that's when they're going to want future. Um, and then, again, what's the sources of the cash? What's the operating uses of the cash? And what's the net operating use of cash? So that's just, a sample to kind of help um, you go ahead and look through that. A profit and loss statement measures revenues and expenses over a period of time. So it tracks profitability, whether the business is making a profit on what it sells. So that's pretty much what your profit and loss is telling you. So P&L is another, sometimes you'll hear someone say, do you have a P&L statement? It's a profit and loss statement. It's an income statement. So it's going to show how successfully the buying and selling process has been managed. So it measures the ability of your business to grow, repay, debt service. So you're looking over that at a time. So as a bank, I'm looking at your profit and loss statement over the last couple of years, if you have been established, to see, are your revenues growing or are they decreasing? What is it, that you're looking at for the business? If that's continuing to grow, maybe you're doing other things. Maybe your staff has grown and stuff like that. So it's giving also, how you're managing the expenses as well on the income statement. So what is the basic formula for profit and loss statement? It's your sales, your minus your cost of goods sold equals your gross profit, and your overhead equals your net profit. So your overhead could be what you're paying yourself, your employees, taxes. It could be interest on loans that you may have had. Are you renting? Are you paying someone rent? Are you, it's breaking it down even more so of other contributions that you had to do. But it's pretty much your overhead. And then what is it that your net profit is at the bottom is what's looked at as the cash flow for the loan. What is the basic formula for profit and loss statements? Net profit pays for owner's draw if they're a sole proprietor, future expansion and equipment, principal loan repayment, income taxes. So that's what your net profit pays for. How do I compile a profit and loss statement? Well, I have on here that it's easy, but if you have an accounting software, it's extremely easy. You're just plugging in those numbers, and it's, I'm a treasurer for a non-for-profit. So when they asked me to do that, I said, if you have it on QuickBooks and it's a software, I'm more than willing to help and look at it and do it. If it's a manual process, absolutely not.
I would say we're in the same boat because we do use QuickBooks here as well, and it's definitely worth the investment of the cost because it just makes life a lot easier. And it may be overwhelming at first, but there's plenty of people out there that can help you learn it. And you can also contact us here at the Chamber. We can step you through some things as well. Lori, I wanted to thank you. This was great information, not only for somebody who, if they're looking for financing, but it's also a good review of these simple tools, whether you use QuickBooks or something else, to make sure that your business is kind of on that right path. Yes. Especially in these days where there's a lot of things changing, variability that are somewhat out of people's controls. This can also kind of highlight things that are changing and things you may have to look at and examine in your business.
Yes, definitely. You're welcome. Always my pleasure. Feel free to reach out to us. We're always more than willing to help and assist. And giving the tools for a healthy business, not only the communities themselves will thrive on having good businesses that are in their community, and it just as a whole just makes everyone thrive.
And what we're going to do is, for those listening on the audio podcast, you can reach Lori at lritzert@hinsdalebank.com. You can also give her a call directly at 630-655-8001. We're also going to have that information in our show notes as well, so you don't have to write it down if you're driving, because we prefer you not to.
Yes.
But no, thank you so much. We'll definitely have you on again to kind of dive into some other topics. And much appreciated. And for those listening, make sure you subscribe. Whether you're listening on YouTube, make sure you hit that subscribe button. Apple Podcasts, Spotify, we have a lot of different ways you can tune in. myhcba.com for more information on the Heritage Corridor Business Alliance. And Lori, once again, thank you so much for listening. I'm
You're
sure
welcome.
our listeners enjoyed it as well.
Thank you.
And my name's Dan Molka, for those who forgot, with the Heritage Corridor Business Alliance, the Lemont and Homer Glen Chamber of Commerce. We will see you again next time. Thank you.